earlier on the show, we heard from the Reserve Bank after it cut the official cash rate to the lowest level in 3 years. Banks have already started to react with some interest rates being cut already. Joining me now is the head of one of those banks, Antonia Watson, Chief Executive at ANZ. Good morning.
Good morning.
Good to have you here. So why, first of all, you have dropped 20 basis points. Why only on floating, not on fixed?
So the fixed home loan looks at the forward interest rate curve, technical term. So all the expected price cuts in the OCR tend to already be baked into the fixed rates, and you can see our fixed rates already mostly begin with a 4. I think 50% of our customers are on a rate that begin with a 4 now.
And so, given that this is expected to be the end of the cycle, we probably won't see those fixed rates coming any lower.
Yeah, it's hard to know, but certainly the experience with our customer base at the moment is that they're starting to fix for longer. So I think people are picking that we're pretty much at the bottom of the cycle, and the Reserve Bank indicated that yesterday. Okay,
so in a couple of weeks you're not going to come out with some special rate?
Oh, look, I can't talk about future pricing, but you never know.
So you're cutting 20 basis points, Westpac is cutting 20 basis points, ASB cutting 20 basis points, Co-op comes out and cuts 31. Why can they do that and you can't?
It's a competitive market. We make our own decisions based on, what our balance sheet looks like, what we need. One of the important considerations that came into our decision is that we didn't want to cut our deposit rates as much as 25 basis points, because we want people to want to deposit money with us so that we can lend that to the home borrowers and the business borrowers.
So are we subsidising the savings?
Not necessarily.
As mortgage holders?
No. So it's just a careful balance across both sides of our balance sheets so that we can encourage deposits and make sure that we can fund that home lending and business lending.
What do you say to those who will argue, and Co-op and others economists have, that because you're a big rich Aussie-owned bank, you hold a big chunk of the market, switching is complicated for people, that you can get away with bloody murder? Co-op has to come out with 31, you can get away with 20.
So switching is not complicated, and I guess the proof in the pudding that at the moment, in an average month, every mortgage that's coming up for refixing or a new lending is switching. 25% of those home loans are switching banks. So it's not that hard, and we're absolutely seeing that in the market, and that's one of the signs of a competitive market.
That claim has been contested somewhat by Shamabil Yacob and others, who say that it's a misleading number that you're using, that the real number is more like 7%.
I don't know how they calculated that, but I think they might have thought that I was saying that 25% of all home loans are switching every month. And that would just be almost inconceivable. Imagine the work for the lawyers and people if every single person, 25% of people every month switch their home loan. So I think that might be what they're saying, but what I'm talking about is home loans that are in the market on the average month, 25% of them are switching.
You don't think it's too complicated for people? Like, people put it in the too hard basket of trying to switch banks.
Well, if I'm in the market to refix or get a new home loan, and 25% of the time I'm fixing, it can't be complicated.
All right. What about the percentage? Because the OCR is only one of the factors that goes into setting the rates. What proportion of it, they set the OCR, what proportion of what you charge is sort of factors in the OCR?
It's not a pure mathematical equation, so there's a lot of things that go into the cost of borrowing. One is our cost of capital. We've got $20 billion that we bring in from New Zealand investors and offshore that we invest in our bank. One is the cost of our overseas borrowing. We don't have enough deposits in New Zealand to cover all our borrowing, so we need to borrow from offshore. One is the OCR rate. That tends to have more of an immediate impact on floating rates, which is what you've seen in the last 24 hours. And one is what economists and experts are looking towards the future and saying, what do we think interest rates are doing in the future?
Given the state that the economy is currently in, and you know as well as the rest of us, should they have gone for a bigger cut?
I think what we're seeing at the moment is a lot of green shoots. And so I think that the commentary yesterday was saying, the likelihood is that we're at the bottom of the cycle. They weren't saying no more cuts, but they were saying the likelihood is that we're at the bottom of the cycle. You talk to Port of Auckland and you see the increase in exports that we're seeing. You see differences in our balance of payments. You're seeing a little bit more spend. Our card spend data is going up across most categories a little bit. All of those are little positive signs. I think the missing piece is sort of the confidence, is that it still feels a little bit ugly out there. And as some of those green shoots start to appear, it'll be interesting to see how the Christmas period in retail and hospitality comes out. But as those green shoots start to appear, hopefully confidence will build. People are happy to go out, take out some lending, buy a house, invest in their business, whatever they want to do with it.
Do you think the Reserve Bank's been too slow with cutting in the last year? I mean, it was August last year we started the cutting cycle, and we're still not really out of the starting blocks in terms of a recovery.
I'm an accountant, not an economist, so I won't comment on that, but it's very easy to hindsight things, and I think that, you know, they were amongst the first in the world.
Do you feel guilty for having such a big profit?
No, I don't. And I think what Kiwis don't understand, and look, I understand that, it is a very, very big dollar number, but we're a very, very big organisation. We have over $200 billion on our balance sheet. That's about $160 billion of lending. So in that context, $2.5 billion, well, it's a very large number, and I completely acknowledge
It's massive.
that.
People think, whoa, these guys are ripping us off.
Of course, yeah, and I understand that. And the thing to look at is what is our return on the capital that we invest. So we provide our investors a modestly above cost of capital return. Cost of capital is the minimum that an investor would want to receive to bother investing in us. So we want to encourage that investment. We need that $20 billion to come to New Zealand, or else we couldn't lend the money that we lend.
Antonia, nice to have you on the program this morning. Thanks so much for being with me.
Thank you.
It's Antonia Watson, who's Chief Executive at ANZ.